Just doing a quick sound check. Let me know how it's working, folks. Excellent. We'll get started here in about a minute. We'll get going right away. Welcome everyone to the Kendall Report live stream on Wednesday. It's abbreviated version from what I used to do, but welcome. There's a fair amount to talk about. If you got the tweet that I sent out, I called it the debt ceiling lie. And there's something going on here, and I'm going to let the room fill up, so I'm just going to do some filler here while we're at least coming up to this part of getting the room filled. But this entire debt ceiling thing is an absolute scare tactic. Just read you a couple headlines here. USA edges to default, Pentagon grave warning. Then the rally that we saw in the reversal, McConnell supports raising debt ceiling. And what they've been trying to do, and I'm going to show you a clip here in just a few minutes. I want to bring in the perspective of what no other word, what bullshit we're living in and how this government's being run right now. And it's all about scaring. So we get the scare of COVID, you're going to die. Now, here's another one. The news lines moved on me. Jamie Dimon, business leaders warn debt ceiling, risk of catastrophe, right? Everything, the end of the world, the sky is falling. Well, I can tell you the sky is not falling, and this is complete bullshit. I'm going to show you a clip here in just a couple of minutes. I want the room to get a little filled up a bit more. But I'm going to show you a clip of Janet Yellen admitting to what the real solution is, and that the Democrats could have done this weeks ago, anytime they wanted to. And then I'm going to bring in some other perspective. And I just, I sit here all the time and I watch this stuff going on, and then sooner or later, you have to call it when you see it. And that's, it's out there big time. You've got everybody in the Biden administration. Biden's out there telling us about, the credit worthiness of the U.S. Well, the last time we got a ding, him and Obama were in office. Okay, so he ought to know. So they're trying to scare a couple things. I'm going to let you watch this video clip that I'm talking about here. I'll bring this up, and it's going to be probably about 2 minutes. So go through the pain. And if you happen to be, it's a Republican senator asking some questions to Janet Yellen. So let's go ahead and listen to this clip. And I want to, I'll come back on and talk about really what's going on here, folks. Yeah, so I'll be back here in a second.
The Senate floor. And he can raise the debt ceiling
This is Schumer.
by just amending the budget resolution, can't he?
It's possible that that could be done.
Yes, ma'am. So why didn't he do it? Why don't y'all do it?
Because
and then
this
we
is-
don't, let me
because
finish.
this is-
Let me just finish. Why don't y'all just do it and then we don't have this fight?
Because
Why
this-
do you insist on doing it the hard way?
Because it's very important to recognize that raising the debt ceiling is about paying bills that Congresses
I know,
have
but I just
incurred
gave
in
you
the
a way.
past.
I
And it's
don't
a
wanna get
shared
off the subject.
responsibility.
So why
And
don't you, I agree
Democrats
with that.
have-
So why don't you just amend the budget resolution?
Democrats have provided votes in the past when both houses of Congress are controlled by Republicans, when the Republican Party.
There it
was
is, right
in the
there.
middle of
They need the
reconciliation.
Republican votes.
2017 is a good example, and Democrats pitched in to do their duty to raise
Yes, ma'am.
the debt ceiling.
But I know all that, and we, and I appreciate your perspective, but let me ask you again. There's a real simple solution. Why don't y'all just amend the budget resolution? It just takes 50 votes by my Democratic friends and the Vice President. Why don't you just do that? Problem solved. Done. Easy peasy. Finished. Let's go have a cocktail.
Well, it will be up to the leadership of Congress to
Were you going to recommend that
decide
he do
on.
that?
We will confer with them on what is the best strategy to move forward.
It's not often, I haven't been around this place as long as you
We're almost done here, folks.
But it's not often around here that we have a problem that has an easy solution. And this is a real easy solution. And I get politics. I understand why politically you folks want to have Republican fingerprints on the spending fiscal knife. I get that.
All right, folks, thanks for patience to watch that, but how revealing is that? These guys could have changed the debt ceiling. They could do it right now. They don't need McConnell. They don't need all this stuff, but the point of it is for them to go forward with the reconciliation bill to spend $3.5 trillion. They need 2 guys, 3 guys, somebody on the Republican side just so they can say it's bipartisan, right? And everything they do, everybody that it was bipartisan. That's the key. And the reality is they could have done all this. And like I said, reading some of these, here's another one. Biden chides dangerous Republicans in CEO meeting. A debt limit chaos looms. This is bullshit, folks. Absolute bullshit. And I got to call it what it is. And you know, I watched this stuff this morning. You know, the NASDAQ down 200 now goes positive just over this news story. So the algos picked this up big time. I get how the market works, but just think about what's really going on here and all the scare tactics. I think there's even more stories here, but that's enough of this. But I just want you to understand something is that everything is, you have, now they've got the fear cycle in place with all this stuff on COVID. They got it all in place. And now here's another one. You know, the whole country's going to come to an end. We're not going to be able to protect ourselves because the Republicans don't vote. No, they're lying to you again. You heard Janet Yellen admit that, yeah, that could be done, but she goes on. And so when I see this stuff, you just start to realize just how corrupt everything is, and just from A through Z. And not that it wasn't like that under Trump, it just was different, right? There's plenty of this stuff always going on. And what we're seeing right now is the complete deception of everything and control over everything. So I'm just calling it like it is, folks. So let's take this a couple steps forward. And so if that was the whole snafu over the last couple weeks and seeing the S&P decline, so if this is it, so now we should go back up, right? That should be it. I still think there's a lot of other issues which I want to bring up right now and just talk a little bit about. Those of you in the UK, you know what I'm talking about with the nat gas prices went up 40% yesterday in the UK. We see coal prices and all over the planet just spiking here. We're going to see, I believe, some really crazy stuff. I covered in last night's video, I covered what's going on in crude oil. It's softened a little bit last time I looked at it. But, all of this stuff is rhetoric to manipulate the world in the direction the elitists, the people in power want it to be. And you've got just across the board, you can go, especially on the energy situation. These folks are willing to risk everything just to get the Green New Deal. And let's face it, if all the cars on the road right now were electric, you couldn't power them because there's no electric grid that can actually support that. So even that's a farce. Not saying it's not good for the planet and all that stuff. I'm saying it's all a farce. It's a joke. You can't get there from here. I've been around a long time, and there was a guy named Frank Zappa once. He wrote a song called "It Can't Happen Here," and it's exactly what I'm telling you right now. This stuff it can't happen. Kathy Wood is not right. Oil is not going to be go the path of whale oil. And by the way, whale oil is on demand right now, so that's kind of interesting. So maybe we should buy whale oil. Anything that she wants to buy, will sell. Anything she wants to sell, will buy. And we'll probably do pretty good. But the point of this, and me wanting to bring this out today, is this is all manipulation, everything. And we know this. The whole Fed situation that's going on, and all the so-called tightening and the taper and all that stuff. There's a point in time here where things are going to get out of control. And I think we're almost at that tipping point that there's only so much BS that they can put on us to make this stuff actually, stick. And one of the things, so let's take this from where we are right now. And what's our job? What is this channel really about? We're trying to make some money. We're trying to protect things. Like right now, most of our strategies, 40-60% in cash. We're holding on to the good stuff, and the stuff that's not acting right, we're just out of it. There's a couple things that I could talk to you about in managing money, and not just speculating and drawing trend lines on index charts and buying puts and calls. That's not what I'm talking about here. One of the things that you have to do as a portfolio manager, and we've managed literally hundreds of billions of dollars in our system. One of the things that you have to be able to do is not only just control downside risk, but control volatility. Volatility is not always good. When we are in this place, and I talked about this the other night on the screen, when I was doing the live stream the other night, is, we're seeing a volatility expand. I mean, we're getting 80 and 100 point S&P days again. I mean, I've been doing this a long time. You could turn the clock back 3 years ago. That 80 to 100 points might take 2 to 3 months to get. We're talking intraday, right? So volatility is kicked up. There's a lot of things that are happening right now. When volatility starts to kick up, those are typically points of inflection and points where the dynamics of the markets are changing. So it's going to be interesting. We've got employment coming out here in a couple of days. We got claims numbers and things coming out tomorrow, but everybody's focused on the employment numbers. And I've been talking about this for a while, as I really believe that what we're seeing here is the beginnings of a contraction. Is it going to be a recession? It may be, but it has everything to do with what we're seeing. For instance, I forget which index it is. There's a shipping index that spiked to above, not the BDI, not the Baltic, but there's another one. It was up over $80,000 per day for a container ship or something. I saw this story. It flashed through my, I do a lot of reading and looking at stuff out there. And, this is, matter of fact, let me go split screen here. And I'm just going to bring up this chart here. And this is the BDI. It's just screaming towards 2009 highs. And so shipping costs is going through the roof. They're wrecking these boats as fast as they can, that they can put them in. Yeah, so net gas is down 10% today. So, but that's up, that's fine. These are the volatility is what I'm talking about here. And I think, these costs aren't going away. I've been telling you folks that we would know when we got to October. I remember back in July and August and maybe even before that. So we won't be able to really put our finger on this inflation situation until around now, October, maybe November, in the fourth quarter. We're there. And so this is becoming a real issue, and it's going to be hard for them to hide from. In that same interview that I showed you with Yellen, she was asked what she thought. She, in her previous time in front of Congress, she was asked what was her expectation for inflation. She goes, I think by year end it'll be 2%. This was 3 months ago, right? Now she's like, well, it's going to be higher than that. It's going to be 4%. It's probably going to be 6+. By the time we get into winter, we see even more disruptions and things of that sort. This thing is going to become material. And a lot of this inflation, some of it's good. I'm going to say the wage inflation is good. If we can get people back to work, maybe wages will stabilize. But for right now, there's a shortage, as we all know, of labor. There's a shortage everywhere you go. No one wants to work. I saw a story that Home Depot has contracted somehow with Walmart to deliver their stuff from Home Depot. So Walmart must have some, I guess, excess shipping that they can do. So there's just a lot going on. So a couple things I want to bring this together with, and I think important. There's a chart I'm going to show you here, and I think it's really telling a very interesting story. It is the transport, DJT. This thing is really finishing a fourth wave, and it's possible we're going to see this thing surge. So I want to take the opportunity, and I'll probably ask you folks for some guidance here as we get a little bit more into this. We're about a half hour in here, about 25 minutes. So what I want to do is I want to focus on transportation because it looks like there's potentially an opportunity here. The PPMs, let me go full screen so you can see this a little better. The PPMs here are just about to turn up. This is on TradingView with the WaveTech PPMs here. They're starting to turn up. This pattern that we're setting is probably an ABC pattern within a fourth wave. And it just looks like we're setting up a potential, at least a retest of the highs and a possibility of moving much higher. And so I'm going to start talking about this on the channel a little bit and focusing in on some of the transports and seeing what might start to look good in that sector. So in a little bit, if you folks will, don't do it yet. If you folks are watching any transport stocks that you think look good, maybe we'll review a few, and ultimately I would like to do maybe build a portfolio like we did with the Warren Buffett and the airlines. And that might be something interesting to do. We had a lot of success. We made 130% on that Buffett strategy last year, just off of some airplanes. So it was a pretty good deal. This probably is a much more contracted. It's not that type of return because when we were buying the airlines, they were in the dirt. It was right after Warren Buffett sold them. And I did the video, how to take advantage of Warren Buffett's mistake. And it was a mistake. He completely screwed up. He sold the whole, but I've told you many times in the past, the reason why he sold the whole is because the Secretary of Treasury last year, previous administration, when that stuff was going on back in 2020, he was trying to get some special sweetheart deal to finance the airlines like he did with Goldman and other elements back in 2009. Warren Buffett's always done, he's I guess he's one of these things where he is going to slant to always try to get government deals. I mean, when in 2009, he did two specific deals that were huge, one with the Bank of America and one with Goldman. And there were some other things he did with bonds that were guaranteed by the government. And he made a lot of money on those things. And you and I will never have that opportunity. So anyway, this pattern that I have on the screen here, I think is one to pay attention to. So, yeah, so try to hold back just for a few minutes because I want to go through a couple more details. I want to talk about something. I want to go into long-term thoughts on the stock market itself. I've told you that even though we're getting a little correction here, I don't really see this as a major event just at the moment. I still think we're looking at, let me show you here. This is the quarterly chart, and this is a log chart because I want to show you. If I go just in a linear chart, this thing's just vertical. But if we go to a log chart, and it makes a little more sense, it's easier to read from that standpoint. But if this is a correct Elliott wave count, then and I haven't done this thing just right, but I can kind of guess here. What we're going to, if this sequence is right, the chances are that 1 and 5 wave sequences are going to be somewhat equal in length. If that's the case, there's a fair amount to go yet on this looking at a log scale. And I will do some work on this and maybe talk about this in one of the daily streams here as we come in next several weeks. But there's still a lot to go. I've talked about this before. There's only been, if looking at this chart, if you blow this up just a little bit, there's only been, for the most part, throughout history, anywhere from one quarter down, like in 1987, there was one quarter down. And then we went up, there was a negative quarter, but very slightly negative. And we just don't get that many negative quarters. Now, we did in 2000. That was one of the biggest ones. 2008 and 9, we got the next batch. And then they've been very spotty. And of course, last year we saw this, big drop when they turned off the economy and now turned it back on. So we're still in this uptrend. Let me put the PPMs on here, just so you can. Okay, I'm going to have to arrange them just a second here. Okay, there's PPM 1. Now they're arranged properly. But the PPMs have flattened out, but they're still very strong from the standpoint of where they are. I mean, we're looking at right now, PPM 1 is 4.09, 3.39, 3.22. And if we look back at all of the previous tops, every time we had a multiple sequence, the PPM set up, they started cross like they always do, their first, second derivative, all that stuff that has to happen. Now we're down ticking, but we haven't made those particular events yet. So I'm here to tell you that we're still going to see ultimately higher prices, whether we get to something that looks like some kind of minor top or not. I don't think that's the case, but I talked a little bit about this. I'm going to a monthly graph here, and we did have one monthly low. Typically, they'll come in twos. We'll get 2, maybe 3 months, which would be a quarter down. But it looks to me we're already rallying back on this thing to get to those places where we're looking at some continuation, and the monthly number 4175 has been significant. So I'm going to go over to TradeStation. We're going to take a look at what happened. I did a tweet the other day, and I was talking about what's going on in this 4260 handle. Well, last night, let me get to a daily chart. We did it again. If we look at the last, we'll go last 4-5 sessions. So we had a low of 4260, had a low of 4267. Yesterday we had a low of 4269. Today we had a low of 4273. So we're getting down in this mid 42 handle, and we're bouncing out of there, and we're bouncing pretty big numbers. And if we look at the ranges of the last 4 days, they're almost identical and they're switching directions. So if we close higher today, that'd be the first time we've had 2 days in the same direction for a while. And you can go back about 6 sessions. It's a daily futures, and you're not going to see that. And one of the things that is still out there, and I've talked about this a little bit, the downside target 4225 is a significant data point that I'm watching, but we keep bouncing out of here, and we're starting to see maybe a pretty decent bottom set up here. PPMs are trying to turn up. We're no longer in a downtrend mode on PPM 1. We were in almost 0.30. Let's see what that number was. We were at 0.228 just about 4 sessions ago. Well, all that downward pressure is blown off. Now we're at a point where if we can get above the 10-period moving average, 43.62, then we would probably move up toward the 21-day moving average. That's right at 4,400 right now. It is declining at the moment about 6 handles per day, so probably 43.90, 43.95. I'll be able to fine tune this just a little bit, but for the most part, we're seeing this downward pressure that had built fairly quickly start to bleed off, and now we're potentially going to go into more of a consolidation range. Just want to tie this together with looking at the weekly, and the weekly, I've talked a fair amount about this. We're right back to the 21, 43.45, last trade 43.40. So we're trying to get back above that number, and then major resistance 44.32. That's going to be probably your top end, somewhere between the 43.90 to the 44.30, maybe a little bit less than that. Like I said, I'll be able to tie this together here shortly. So let's, yeah, so I think what I want to do real quick, we can look at, I'm going to bring up the 10-year for a minute, 1.52. I've talked a fair amount, I covered this, but PPMs are still accelerating. This is weekly. So there's still going to be a lot of upward pressure on yields. That's for sure. But I don't, like I said, I'm still looking for ultimately 165, 170. Just want to look at a couple comments here. I see Don Wiz, don't transfers suffer in a recession. Yeah, they do, but I don't know if there's going to be a recession, at least not at the moment. I'm just reading the charts, and the chart's saying that there's a potential explosion there. The beauty is, if you're using a platform like ours, we're not going to get you into anything that doesn't have a trend mode. So that's going to be basically the protection. And then just like we had on the Buffett strategy last year, we didn't buy them until the signals came out to buy them, and they were huge numbers. So what time we got? 12:37. Markets are kind of sputtering around up here in slightly positive range. Let's go over to this chart real quick here. We're just looking at trading back at 38 here, up 4 handles on the day. I would not be surprised at all to see these things sell off. And like I said earlier, I'm not sure that the fact that, okay, they raised the debt ceiling, was that really what this is all about? Is that really what's going on here? I think there's other material things going, and I mentioned China, and then what we're going to do here, I'm just going to go on for just a minute, and then let's take, if anybody's got any good stocks. You know what, I'll do Bitcoin before we do this next level, because I think Bitcoin is very, very interesting right now. But, we're really just, I think, in this very large consolidation range. I don't think these indexes are going anywhere. Like I said, the 42, mid 42 handle is starting to hold on the S&P. We'll see how that plays out, but it won't take much. There's not any real upward pressure. It's very neutral, and the downward pressure is starting to show up on the intermediate chart. So there's going to be probably a consolidation. My big thing, as you folks know, will be our intermediate database. It was at 55% bullish. It's now 42. We'll see what kind of, if we get further liquidation this week. If that starts to happen and we see a ton of intermediate trades start to fade off. Let me see here. I think, yeah, I have, I can put that on screen real quick here. Let me, but right now, on a short-term basis, we're, shoot. On a short-term basis, we're really just at a 42.84, and we're 6,900 symbols long, 9,334 are neutral right now. And so we're really not seeing, you know, if that further liquidation, we get down below 37, 32%, that's going to just tell you a lot of these symbols that have been in long-term trends will start to fade. We look at the, from the standpoint of what's on the screen here, capital goods is actually right at its extreme. It's 209 days of 211. What our platform does is we have metrics for everything, how long it typically holds, the returns on the symbols, everything is broken down. So we have a metric to expect how it's going to act. So we're still looking at conglomerates tend to hold 427 days. That's a year and a half on these intermediate. 214 days on energy. There's that one's been long for a very long time. Just on the energy itself, it's been up right now. Looks like 43% on energy, and that goes from November 30th of last year. And this is on a sector basis. And so right now we've got 6 sectors long. We're 50-50 on the sectors. We're 37% of the industry groups are long, and 42% of the symbols that are in the database. And this database it encompasses everything, whether it's bonds, ETFs, individual stocks, the whole bit. So this is just gives us a really good metric on how to on what's going on there. So let's go ahead. We'll go back over here. So let's take a look at if I don't know if you guys have any transport stocks. You know what? Let me go back to our platform real quick here. And let's go to transportation. Right now is flat, so it doesn't have a position. Although right now, the airline index is long, 214 days. This goes back to last November. These are at their end of cycles, not at the beginning of a cycle. And I don't think I have the Buffett strategy on this. Yeah, I'd have to go into a different login. But the for right now, we look at the groups here. We're really just looking at. We go into air couriers flat, airlines long, miscellaneous, railroads are long, and there's just a Canadian National Railways been long 21 days, and then we're looking at the what's now air brake technology that's in there as well. There's not a lot of traction yet, so my guess is we're going to get pretty close to moving this around. Let's take a look at CSX real quick. In fact, let me go over to the other platform. Yeah, so it's interesting because CSX has just exited. So maybe that that graph. Let me put this full screen so you can see it. We'll put it so you can see this a little bit better. Yeah, so CSX was long over here at 24. It sold at looks like 32 or so. So it played this out from April 20 out to just the last few weeks. So this has got a lot of work. So this is not going to be one of the players. So maybe there's some other subcategories that we need to look at other than looking at the rails as a play. All right, so I got a little off track. Let's go back to TradeStation. Let's take a look at a couple things here. Let's go ahead and just take a look at Bitcoin. Bitcoin, this thing just breaking out 54. We went above some of the numbers I talked about, 54,977. And I mean, this is just a phenomenal move. So bear with me 1 second here. I want to move that off screen. Bear with me, folks. Just bringing up something on another screen. Yeah, so the number that I've been talking to everyone about is this number here, which is in yellow, it's 60,612. We break above that. I've been telling you that we should get a recalc of these dots up here or the calculation off the Fibonacci. Right now, we're looking at somewhere around 85,000 as a target. And that's when when and if we penetrate this 60,000 number, 60,612, and we should see this thing just absolutely explode. So one of the things that I want to talk about on this, I'll come back on, is what's going on with Bitcoin. So it's been going up. Maybe it's all this digital currency talk by the central banks and those type of things. Those are all kind of scary because I think what the goal is to turn the world into China, where they have basically control. So we can't even do anything without one of these, your phone, and a WeChat, a WeChat or something like that where we have to pay payments. Is there's virtually no currency is used at all in China anymore. And if you don't have a smartphone, they also have digital ways to turn these people off, and they have social ratings on an individual person. So it looks like the whole world is kind of trying to go this way at the moment. And it's going to get, I think, very interesting. Just the controls over society, vaccine passports. I don't know if you folks have heard, but Bill Gates did as an experiment going on in Africa right now with the tribe, where they put they've got their digital marks inside their body, and if their card doesn't match their digital mark, they can't get any money. So if somebody steals your card and they don't have that same matching, they can't get your money. But it's just very interesting that all this stuff is going on out in the world right now. So not sure where this is going. We've never been here before, so it's impossible to try to figure that out. But the thing that looks to me like Bitcoin's up another almost $3,300, $3,400 again today. We're starting to see this surge. It's just really going, I think, crazy from that standpoint. I think there's a lot that's going on that we're going to have to pay attention to. I just want to bring up something. Yeah, I saw some chart, somebody, I just wanted to bring this up really quick here. Yeah, I saw something earlier. I didn't think what I saw was real. Somebody was projecting Dogecoin to 70 cents, but the cryptos are in play big time, and I think they're becoming potentially an alternative asset. Maybe not to the stock market, even though they've acted like that, but maybe to these other digital currencies that people aren't wanting to be, if they can get away with it, not wanting to be involved with, these, we'll call it sovereign digital coins. And it was, like I said, we're just going to have to follow this and see where it's going. An old man trying to hold on to the old world. Oh, yeah, that's what's happening. That's why I'm covering Bitcoin, right? Nice. Yeah, so, yeah, I am an old man. And, I've been on top of all this stuff. So I may be old, but I understand what's going on. It's probably why I told you to buy Bitcoin at 40,000. You probably weren't here, whatever, Mr. Khan. You probably weren't here then. You should have been. And anyway, so actually the original buy was down at 33 when no one else wanted to own it. So yeah, the old man knows what he's talking about. So keep watching. Anyway, okay, where are we going from here? It's 10 minutes till. Let's watch a few minutes of the market. So we're rallying back now. We're up 16 handles, new highs on the session. Everybody's short covering. This might be an interesting one to watch. We got 9 minutes to go. So, yeah. Yeah, Antonio, I agree with you on what you just said here. When Janet Yellen says the U.S. will go into default. Yeah, listen, the whole debt ceiling, the funny thing is Biden was telling us the other day that the debt ceiling isn't about new debt, it's about the old debt. I mean, wow. What can you say, right? Yeah, they've got to raise the debt ceiling by trillions and trillions of dollars. And, there's a lot of talk, Janet Yellen and others are fans of just getting rid of the debt ceiling. Then you don't have to worry about it. You just do MMT forever, to the moon. And that's exactly what's going on. So, yeah, it's pretty funny. Yeah. So something I've been doing, I just want to tell you folks about. If you don't follow me on Twitter, maybe you should. I did something. I'm really upset I didn't record it the other day. I did a Twitter Spaces, and when you get done with that, when you shut it off, there's no recording of it. It's probably the only place where there's true free speech on Twitter. And what was good about it was there was some, I get to talk to you folks. Rather than looking at chat line, I'd rather actually hear your questions. So it's an opportunity, it's audio only. And I was proposing that I do limited where we invite you folks into a Zoom meeting. And I may do that this week. And I'll tweet out something, let you know, and I'll put a Zoom link in, and maybe that's what we'll do this Friday. It just depends on my Friday afternoon, what it looks like. I may have an hour right at the market close, right after the close of the market. So, let me know if you think that would be something good. Looking here, We're just going to hang out for the last few minutes of this market, watch it trade a little bit. It's stabilized up here. I want to see that last couple minutes. We've got 6 minutes to go, a little less. So anyway, hopefully this was helpful. I'm just really frustrated with stuff. The guy that made the old man comment doesn't know anything about me. I'm an early adopter of everything, you know, and I had a computer in a brokerage office in 1980 on my desk. I've lived through every iteration of DOS and everything, you know. And, you know, one thing I should tell you guys, and let me see if I can put something up here. Let me come full screen when I talk to you about it. I've talked to, I love when I get an opportunity to talk to subscribers and people. That's why I want to do these things. There was a gentleman on, I think he was in London last week, and just had some of the best questions and just got me into a point of talking about some things. So it really was very interactive conversation. But I'm in the process of bringing something up on the other screen, and I'll show you in a minute. All right, I'm going to show you this. We'll start here, and I'll just talk to you about this. This is a company that has built every trading machine that I've had. These guys are called Digital Tigers, and I've just recently got an affiliate with them to get you guys a 5% discount. But these, that's what I'm running on right now, one of their computers. I won't use another computer than these. They're high end, and you can spend as much money as you have. Probably spend $50,000 on a box. They have a deal with TradeStation. You can get a discount through that as well. And they build a lot of trading machines. And if you want the discount, it is Kendall 5, the number 5. Kendall 5 will get you a discount on these guys. And I'm telling you, they're amazing machines. So I had the opportunity. The reason why I'm telling you is it just flashed to me is that I've talked to a couple of people that just bought computers, and you know, people think gaming computers are good trading machines. They're not. These guys know how to build a machine for trading, especially if you're active day trader, TradeStation, other platforms that you need some serious conductivity and fast communications in and out of the Ethernet. These guys know what they're doing. My original configuration I have, and I changed it, is I had two 55-inch monitors. They have a piece of software they developed that will split the screen 12 different ways. So, but anyway, just right before, we'll watch the rest of the market close here now. But the thing, I just wanted you to know about that in case you guys are thinking about buying it. Just tell them, literally tell them Bob Kendall built it. These guys actually built Bill Gates bombers. They used to sell them. They tried to sell them in Microsoft stores many years ago. It just, it was too high end of a computer for a retail store. But these things are amazing, okay? This is the box I think I have right here. I have a Stratosphere, and it's insane. That's all I'm telling you. As a matter of fact, they're always trying to get me to get a new computer, but it works so good. The last one I used for 5.5 years before I replaced it. So check these guys out. Enough of the advertisement. All right, so here we are. We're still printing up at the highs now. We're up now 20 handles now. So here we go, print new highs on the close. Let me go full screen so you can see this. A minute and a half to go, and we're punching out new highs. We had a range of 42.73 to 43.54, another 80-90 handle range. We're looking at, let me go over to this chart just quickly here. Let's bring this up. let me get to daily. So here we are just about at the 10. We look at the range here. We're looking at R1 43.57. So basically R1, I talked about this last night. I thought we could get down to S2. We went down below S2. We went we went between S2, S3, and I didn't think at the time, the way we were trading last night, that we could get up there. So here we are in the final minute of trade, and pretty good bid. We printed a new high. So let's watch this last minute and then a minute or so afterwards. Yeah, we should do a survey. Thanks for that. Yeah, so Roger, you're always a good troll, aren't you? It's pretty funny. So talk a couple of days ago were that there was no traction. There wasn't, if you weren't paying attention. No chance of going higher. We're not higher. We're back to a 10-period moving average. So we're off the lows. We're in the 80, 90% trading range. I don't know, son. You need to work on your tactic here a little bit. It's it's really quite funny. Why don't you go through every thumbnail and try to make me look like I'm wrong? Listen, we run our software, and we run billions of dollars in our software. So, you know, this channel is to help support, have a perspective of what's going on. You know, we have our short-term models are mostly in cash yet. And, you know, when we come over here, oh, look at that rally. It's the same price it was yesterday and 4 days ago. That's not a rally. We've been stuck in a trading range. I covered this really good. But thanks a lot, Roger. Appreciate it. Yeah, so there's still very little chance of the markets moving higher. If you, literally, the high 4 days ago, 43.65. We're 43.52. Next day, 43.62 again. Next day, 43.69. Today, 43.55. We haven't went anywhere. So, good try. Roger, go somewhere else, okay? Guys like you just bug me. So, anyway. All right. I guess that's your purpose in life, though, isn't it? Yeah, exactly. Yeah, you can go all the way back to October 1st. We virtually had no price movement whatsoever on a percentage basis. Anyway, I think what I'll probably do is call it quits. Go away, Roger. He just won't give up. Okay. So anyway, folks, thanks so much for watching today. Hopefully you got some value out of this. I'll be back at probably 9 p.m. tonight, maybe, like always. So, yeah, anyway, thanks a lot. Exactly, Scott Sanders. Exactly. Yeah, I love guys like that. You know, Anyway, he does need a puppy. Anyway, I love hanging out with you guys. You know that. I'll be back at 9 o'clock tonight. Hopefully there'll be some things, but you know, what a turnaround day. All it takes is a little politics to run the markets. And they got McConnell to say the right words. What if overnight McConnell goes, you know what? Maybe we don't want to do that. And but listen, it's it's not like we knew they weren't going to do that. But my point of this thing today was they were lying about what they could be done. They were like, if we don't get the Republicans, we can't do anything. It was all a lie from the very beginning, and they all know it. And I think what we're going to see going forward, if they do get this deal, they're going to get some sort of the reconciliation deal done. And I hope everybody likes paying a lot of money for everything, because inflation is probably going to surge. In just a quick closing comment, in I believe it was 70, I'm going to say 76, maybe 74. I'm having a hard time remembering back that far. But whenever, I guess it was Richard Nixon put it in play. But they did, thank you, Richard, appreciate it. They froze prices. They put price controls so you couldn't raise prices. So if they were to, things get out of hand and they pull that same crap, that will crush the stock market, because then the companies have to absorb they can't do the price increases to absorb. So we saw FedEx, you name it, Netflix, everybody's raising their prices. It doesn't matter what it is. This is an opportunity for everyone to raise a price. They feel justified, and they're just going to just suck on it as hard as they can until they can't. And if they do something like that, that will be devastation. And you know, I may be an old man, but I've seen a lot of stuff in the experience. You know, I always tell people I can teach you everything I know, but I can't give you my experience. Until you've traded and lost and won and made a lot of decisions, you can't get there. So, you know, enjoy your process and your learning curve on making money in these markets, because this is the toughest job you'll ever have. I always sort of giggle to myself when I hear somebody go, whoa, they're going to trade for a living. Maybe I should do a video on that someday, because I have some pretty good advice that you might want to think about before you do that. So anyway, folks, thanks for watching. And we'll see you at 9 p.m. I'm doing another one today. So anyway, thanks for watching. Yeah, the song is called Monsters. I'm not sure who did it. Somebody was asking about the song. Thanks for showing up, everyone.